Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So all day long, everyone's been talking about the pullback in the market. 2 days, we've had a controlled little pullback in the market, and within that time period, if you were in the right stocks, there was no pullback. The leaders just kept moving. You know, if you recall last Friday, we talked about the oscillator being overbought. I think we were plus 60. Today, we were down to only plus 25. High was 1474. We've talked about the 8-day, the 21-day moving average catching back up. And if you take a quick look at the chart of the S&P or the SPX, you will see, this is the big pullback that the bears are claiming victory on. I think this is where everyone's saying they're all in for the fourth time short. Okay, I think the first time they started their all in was right here. When we broke, I think they were probably better off stopping themselves out, as this is when the market started to act a bit friskier right on this day. This was August 3rd. So here we are once again flagging. Last time we flagged above 1420 to 1426, which was the old high of the year. So, to me, I think you're better off, having stops and not rolling things up, because I do know there are a lot of shorts have been rolling up pretty much, ever since the low on June 4th. Anyway, if it wasn't here, I think when the trend started to accelerate to the upside, which really happened right around here, this was this is when Draghi, I think, came out, and actually, no, this was the jobs report. This was when Draghi came out and started jawboning about doing anything to keep the euro together or taking extraordinary measures. So I remember I was net short on this day, and I said, you know what? Maybe I don't know everything. Maybe he does have a solution. Maybe there is some kind of framework. But either way, this was the trend that was holding. It looked as if it was going to break right there, and it didn't. So I said, you know what? I'm going from at this time a little bearish back to objective. I'm going to read the tape, not the opinions of everyone else out there. And P.S. boom, you had 2-day move, controlled pullback, and this is when we went back to pretty much a multiple position approach, which paid us very well into this outside day. Then here you go again, boom. So now we're flagging once again. You have the 8-day catching up. Now it's at 1448. It moves up every day. We're flagging here, and as we're flagging, we're seeing a lot of great movement. Last real buyable strategy was the day of the iPhone release for Apple, right? They took it down 2 days before. Last hour, they came for the stock. The buyers took control back, and that's when you saw on my virtual trading floor, I went back in Apple because I wanted to figure it out, see what they did with the event. Everyone said, oh, they're going to sell the event. Meanwhile, they sold it 2 days before, got all the weekends out of the stock, and then the stock took off. You look at Apple right now. Apple just paid swing traders about $30 if you stayed with the trade, starting from right here. Okay, this was when it reversed on the on the day that they came out with the iPhone 5 and had their big press day. So day 1, day 2, day 3. Now we're above 700. 30 points. A lot of people can make a lot of money with 30 points in 5 days. Let alone the last time we really talked about Apple was when there was really big opportunity. First, they missed earnings. This was your perfect entry, but I even missed that one where I said, let me see the commitment. And right here, after a 3-day move, did we pull in? Did it fade down? Did it fail? No. It held up, gave you an 80-20 red dog reversal, and then this was that move that we got out on this day before this outside day where it had to reconvene. But anyway, lots of trading going on here in Apple. You could have be an active trader, a macro investor. If you were a macro investor in Apple, you can be a stock picker and you can make a ton of money. Or like I just showed you, you could be an intermediate trend trader, which is what I like to do, and got involved either on this day when it went into the gap, or maybe right here, or maybe right there. And look at this. Lots of different entries and exits. Anyway, close strong. Congratulations. Another stock we've been talking about is Google. Google, same type of scenario. We came in this year pretty, very bullish on Google. And you know what happened? They missed their earnings twice. Okay, and within that time period, you had 2 big gap downs. Okay, you had it. Let me just see a little bit closer. Right here, boom. Remember, we were pretty bullish, thinking that it would be the high beta tech stock of the year. When it broke above this level here, which was right there, 640, gave us a nice trade before breakout failure. And then us, we don't take stocks into earnings typically. It missed, held. Okay, and then from just to fast forward, it held this big 560 area during the whole year, then finally started acting well after the last earnings report. So even if you missed this mess or you held through this mess as a macro investor, or you got back in when it reclaimed the 200-day, because sometimes you get out. One of my rules is if it loses the 200-day, it doesn't reclaim it in 3 days, you get out. So you could have then got out here and then got back there, and then we, if you're on our site and use off the charts, use our price point sheet, this really was the entry. That was the strategic entry. Then you had another entry right there, and then we talked about buying the 660 area on the Samsung news, and then more recently, the guys on my virtual trading floor saw me get long yesterday as it was holding higher. Then on the price point sheet, we had 713, and then it closed at 718, another $5. So for the active trader, you're making money. For the intermediate swing trader, been hugging this 8-day pretty much the entire time, with a few different times where the 21-day almost came into play, and all of a sudden I said on Bloomberg today, the monthly chart still looks awesome. Historic high 747. It might get taken out sooner than I thought. I said at some point this year, maybe December, December-ish, but closing at 718, where you could blow on this thing and it'll be through this. But anyway, very tactical. And just, all in all, you can't argue with the price action there. Amazon still a little choppy, but it's still, decent. LinkedIn still hanging around. You take a look at the LinkedIn chart. We started talking about how this would be a macro investment that had all the criteria of it. You had a few different entries. One being when it broke the small downtrend here and then held above it. Another one when it broke right here. And now it looks really good. You go to your daily chart, want to take a little bit more of a granular approach to it. You will see that it's, just letting the 8-day catch up, held it, bounced off it, and now we'll see if it can get some momentum in the next few days and trade to new highs. Trade above this 125. I'm long a little bit, and we'll see what happens there. Facebook acting a little bit better. If you look here at the chart, obviously a gross new issue right there. Little red dog reversal, decent trade from this area, if you remember, if you're a part of my site or you saw it on Twitter. And then the trade changed once it broke this support. Get out of the way, and then guys are trading it from a net short. Okay, then all of a sudden this was the announcement that that Zuckerberg was going to hold his shares for the year, and that the firm was going to buy back stock. So even if you missed that, there was some commitment to that move off the lows. This was your real swing entry around 1940, 1945. Then you had a really nice move, and there was the 50-day moving average here. I don't know why it's not on there, so I'll put it back on. You go to basic studies, go to your moving averages, look at the 50. So coming into the 50, not a bad area to sell to see what it would do next. It's proving that it's holding higher. I am long some. I think with a little bit of time, as long as it stays above the moving average 2080, it could see a move to try and fill that gap. I think the sentiment's starting to change a little bit, with Facebook. There's that little downtrend we're holding above it. Yeah, as long as it goes sideways and shows commitment higher, I think you stay with it, and then here's your next resistance right around there, and then you have a really big gap from that earnings. So we shall see. Tactical cute shorts. People on the Twitter sphere love the word cute, and they're like, why do you call a short cute? Because the trend is up. So whenever you look for a cute trade, you're doing something you probably shouldn't be doing, and you better do it surgically. And we talked about the weakness in the banks, or the move off the highs on Friday in the XLF, which also gave us some clues to add to our hedges in the spiders, which got us, almost net short, and also sell some excitement. So you look at the XLF, what happened there on that Friday, right? This was your little topping tail, and now you've had your controlled 3-day move. So at this point, maybe you buy into the 8. I nibbled on a little bit here. I chose this as a short, Goldman Sachs. And if you saw my my Twitter account or the VTF, you saw it disappear when it traded below 119. So I think my net cost was 121.5. I've covered the rest of it at 119. So I make $2.50 on a cute short. The more important thing is this stock led the way, led the banks higher, turned green today. It's still looking good above the 8-day moving average. I know there's news out there right now that the CEO is retiring, or not the CEO, sorry, the CFO is retiring and joining the board. I don't think it's a big deal. He's allowed to retire. He's staying with the company. First instant when I walked in here, everyone was saying, oh my God, Goldman Sachs. It was all over the Twitter sphere, and people were selling it down 50 cents, 60 cents. No big deal. He's allowed to retire. He's not retiring because there's funny numbers going on. He's just, it is what it is. But anyway, so if Goldman's down a lot tomorrow, I think it's going to be an opportunity. We'll check it, but I doubt it'll be, because once the dust settles and all the fear mongers are out of the way, it'll probably be fine. As far as JP Morgan, pulled back 3 days, looks good. Held above the 8-day, reversed, almost a little red dog reversal there. Remember this strategy that we talked about right here? This was your last tight strategy to be a buyer of it, and since it's been working its way higher, showing you a lot to like. Silver made a higher high today, all right? Didn't have much power, but still moving to the upside, still hugging the 8-day moving average. Gold has been second in command here, moving up. So we'll see tomorrow if gold could trade above this little pivot. So this is on the radar, looking good, above the 8-day, been hugging the 8-day this entire time. This is when it ignited. This is when it got under, on its way. We talked about August 20th and 21st. Look at this. Gold just was nudging against the trend line on this date. This date was what? August 20th. I think people who are involved in the gold, it's going to be a national holiday. But the important thing is, look what happened here on that day. Silver poked its head through first. As a trader, you look for indicators, and this was an indication that you better start getting in some gold also, or at least watch it, because silver broke out first, and it gave you clues that this would break out next. The same way Goldman, the leading indicator for the banks, broke out on September 5th. And did you see JP Morgan break out yet on September 5th? No, it was still in the base right there, September 5th. That's what you do as a technician. You look for clues from stocks within the same group. You look for patterns breaking out. If you come back to me before you go, and that's how you adjust where to go. Because there are stocks that lead other stocks. That's when they trade in groups. People have been saying to me, why don't you be long Apple and short Google? I'm like, no, this isn't an arbitrage situation. This isn't, you don't need to be a hedge fund and be long one, short the other, 7 long, 7 shorts and make no money. I trade direction. I go with the leaders. Apple and Google have been leaders going up together. Yeah, they take turns at times, but you don't need to be long one, short the other, vice versa. Anyway, I like to trade the fastest, most highly rated stocks that are on the move, because we are in the moving business, not in the storage business. I don't know, where did I hear that? Anyway, so at this point, it's almost like this is like the Godfather market. Every time I try and pare down positions and be prudent, things hold in there, things perk up, and I get back into more positions. Where last night I entered, with a decent amount of spider short. Today I leave with less short. Yesterday I entered only with 2 longs, I think, or 3, and now I'm leaving with 6. So I'm managing positions, I'm taking things out, I'm moving things around, selling into some strength on like we had on a Friday, adding to hedges, covering those hedges today. I think I tweeted on Friday, 147.5 was like the average cost. I said if you want to have a cute short in the spiders, short 147.40, I'm like, you could put a stop 147.70 and stick with it. And PS, we went down as low as 146.20, 146.30 today or something like that. So $1.30 from the cute tactical short side, if that's what you were looking for. And I think that's what the Bears are pounding the chest that they got. But meanwhile, they missed a hell of a move from August till Friday. So maybe they caught a move Friday to Monday that really wasn't that great. So did we. We can catch both sides because we're objective. But anyway, I don't know. I'm a little delirious today. It is. It's only Tuesday. Wow. Anyway, hopefully you're maneuvering the markets. You're managing positions. You're being objective. You're looking to the leaders. You're not fighting the trend, and you're educating yourself on how you can make money from the market, so you don't go home stubborn, pissed, upset, and cracking things. With that said, have a good night. I'll see you tomorrow morning. I'll have a little bit more sanity. My parents are in town, and you know what happens when parents are in town. I love them, but that's what happens. So maybe I'm a little frazzled. Besides being on Bloomberg and having everything go on today. So with that said, just relax and let the tape come to you, because there is a lot of action if you open your eyes and look for it. See you in the morning call. Have a good night. Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.